Three parts of the call here. Number one is, you mentioned, is on the hardware business. We do think that Apple's going to continue to struggle. We've seen the units and market shares be under pressure. We think pricing is going to become under more pressure as well for the devices as people trade down. Second thing is the service business, which a lot of the bulls point to. It is a good growth business, but we think that's going to slow, and particularly over time, if they don't build up this installed base with first-time users, that might come under pressure. And third, the valuation. The valuations continue to rise for this stock, despite the operating margins coming down 650 basis points over the last few years, and that's with the better margin service business growing faster than overall. So that's kind of the basis of the call.
And so you don't think there's going to be a recovery here in the iPhone business because people are hanging on to their phones longer? The innovation just isn't enough to spur me to trade it in?
Yeah, so it's interesting. I think we've seen a lack of innovation. If you have to go back 5 years before the units peaked for Apple, so the last number of phone introductions haven't really moved the needle for them. It's getting more competitive globally in that high price tier. It's actually a tier that's been under a lot of pressure. We did a little analysis on pricing, and this is the first year where we really saw a major step down in consumer buying towards the lower end of their portfolio. Prices on average for Apple have gone up the last 4 or 5 years, and we think that's going to reverse course here as well. And we're not really expecting much out of this September launch this year. Next year, there might be, there will be 5G phones, so there's some hope there, but we're a little skeptical on that as well.
Yeah, there are a lot of people who are skeptical that masses of people are going to want to step up to 5G. Time will tell. A lot of people do want the latest and the greatest. Do you think Apple needs to cut the prices of its phones?
Well, I think that's unfortunately one of the things they've had to do in the Chinese market,
right,
where it's very competitive, and we've seen that, as I mentioned, the margins coming down. A lot of that is due to the hardware business. So, yeah, it's likely that will remain an issue for them. Now we have the risk of incremental tariffs, which is something that they would have to address. So rising prices with negative elasticity will be difficult for them. If we're adding 5G next year, right now it's a few $100 premium for that. So there are a few dynamics that might inorganically make the prices of the devices go higher in a time where people are trading down.
Is the regulatory pressure that Apple has seen from the App Store, say in Europe, with Spotify filing a complaint that it's very difficult for them to compete, is that at all part of the reason for the call for the services?
A little bit. I think it's mostly about the installed base, and we think what's going on. They are still growing their installed base, but we think that's largely secondhand phones. So I think the service attached for those users will be less and less. So most of it's tied to that. But the regulatory issues, the more competition, getting into original content, it's making it a little bit more competitive environment. So they might see pricing pressures, and of course that's part of the reason for that operating margin. There's a lot of investment that goes into these new businesses. You don't just create a new service business and roll it out to your billion-ish users and it works. You really got to invest in these businesses.